the time. The bankers have to be realistic. It's important to be optimistic, but it's important to be realistic. I get a sense that when we started FY16, and again, we all have benefit of hindsight. FY16, when we started, there was a lot of hope, there was a lot of hype. Now, would you say assumptions are realistic?
I think there has been a definite correction in the sort of expectation graph that generally we've looked at when looking at the economy as a whole. But clearly there is a lot of positives that is playing out, be it through the mechanics of monetary policy, where we are seeing a lot of gradual steps towards bringing down the interest rates and the term structure as a whole, be it in terms of facilitating a lot of, or rather clearing a lot of hurdles and roadblocks that have been there earlier, in terms of opening up for corporates space for them to be able to raise cheapest form of liabilities for their for their consumption, for their balance sheet purposes. So overall, on the banking side, yes, there have been issues around of late on the on the NPLs, on the non-performance assets and stressed assets. But clearly, the whole exercise that's getting done, pushed by the Reserve Bank, blessed by the Government of India, is, in my mind, in another 2 quarters, lead to a very healthy, sort of overall banking balance sheet in the country, and that should then be a pretty decent engine to start supporting the economic growth that's been sort of talked about and expected
so for this year. So, the NPA concerns are still not over, because, or you expect that will filter to FY17 as well?
Difficult to say, because it depends on what pace each and every individual bank has taken. I guess the process of recognizing what is stressed has been largely completed, but the process of then providing for it is going to be a gradual path. So that you could expect should take another couple of quarters to start sort of impact, or to continue to impact results. But beyond that, balance sheet should be pretty strong.